Welcome back to Alpha Recap. Tyler here. We closed out the day with a pretty clear split. Energy led the gains while AI stories kept piling up across sectors. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from the session. Flows into energy, big activity in leveraged ETFs, and some real commercialization headlines for AI vendors.
So, what really stands out here is the energy move. The big energy exchange traded fund finished the day up about 2%. It hit roughly $57.04 on about 135 million shares.
Right. That was one of the most actively traded ETFs of the session. When you see that kind of volume alongside a 2% move, it usually reflects either firmer oil prices, rotation into value and cyclicals, or concentrated flows into the energy complex.
And to add to that, traders were watching crude and inventory prints for confirmation.
Exactly. If API or EIA inventory numbers showed draws, that could sustain the rally. If they printed builds, then the rally could look more like a short-lived flow trade.
Okay, quick check. There was also really heavy action in leveraged ETFs today, right?
Yeah, heavy and a little chaotic. A leveraged semiconductor short ETF ticked up about 0.3% to $1.79 on nearly 991 million shares. Extreme volume there. And a leveraged small-cap inverse ETF fell about 2.5% to $6.07 on roughly 127 million shares.
So that combination can magnify intraday whipsaws.
Correct. High turnover in those products means bigger execution risk, wider spreads, and potential slippage for larger players. Retail and tactical traders also use these to hedge or speculate, which can amplify volatility in small caps.
Honestly, I was a bit surprised by this one.
Yeah, that tracks. Moments like this are when positioning got pretty bifurcated. Institutions and momentum funds leaning into energy, while retail and short-term traders were all over the leveraged venues.
Let's shift to the AI stuff. This felt different than just press release buzz. You saw concrete commercialization notes.
Right. And the theme today was not proof of concept, it was scale. One vendor said it topped 100,000 customers and activated an agentic AI layer across its trade network. That's a commercialization milestone. Scale plus AI rollout can translate to revenue leverage if monetization follows.
Wait, say that again? Over 100,000 customers?
Correct. They announced surpassing 100,000 customers and rolling out an agentic AI layer globally. The key question going forward is how many of those customers convert to paid services or transact through the platform in ways that boost recurring revenue or transaction fees.
And another company launched a product called Seeq Intelligence, positioning itself for industrial customers?
Yep. That launch was about embedding decision-grade AI into operations technology. For industrial firms, that can mean better uptime, faster root cause analysis, and more efficient processes. Vendors that show measurable ROI, like uptime improvements or cost reduction, will win contracts.
Right. And the other thing is the financial crime side. A survey showed firms are using AI to reduce false positives and speed investigations.
Exactly. The survey was a demand signal for compliance vendors. Institutions are prioritizing speed, accuracy, and fewer false positives. That's where vendors that can prove reduced workload for compliance teams are going to get traction.
So, in plain English, AI moved from pilots to products with customers. Big difference.
Yes, when you step back and look at this, it was less experimental and more deployment-focused across trade networks, industrial operations, and compliance. That horizontal spread matters.
But not everything was constructive today. There was a legal headline that shook a small cap.
Right. A small robotics company got hit with a securities class action after a report suggested a major partner denied a commercial tie-up. Those kinds of partner denial stories can trigger litigation, big volatility, and legal expenses for narrative-driven small caps.
Big move.
Investors should expect heightened swings in that stock, potential distraction for management, and firms in similar spaces should be careful about relying on unconfirmed partnership narratives.
And there were a couple of smaller corporate updates too. An accounting automation partner deal, and a big company CEO speaking at a conference coming up.
Right. The accounting automation tie-up was with a large insurance aggregator. No financials disclosed yet. But those partnerships can lead to recurring SaaS or automation revenue if adoption follows. And the CEO appearance at an investor conference is a classic catalyst. It can clarify guidance or strategy.
So, big picture.
Broadly speaking, today combined a sector rotation into energy with an uptick in real-world AI deployment. That was the constructive part. The tactical part was volatility from leveraged ETF trading and the legal shock in the small cap space.
Let's drill into what traders should watch tomorrow.
Look at three things: crude oil prices and the inventory prints from API and EIA to see if energy strength had legs. Any follow-ups from the vendor that said it reached 100,000 customers so we can see monetization metrics, and any filings or responses in the securities suit that could change the perception of the small cap.
Also keep an eye on flows into the energy ETF and S&P 500 related products. Oh, and Google Trends. Searches for S&P 500 doubled to about 10,000, which can presage retail flows into index ETFs and options.
Right. If retail interest stays elevated, that can amplify short-term options activity and ETF volatility. And for AI vendors, watch for customer case studies and quantifiable metrics, reduced false positives, cost savings, throughput gains, because those are what drive contracting cycles.
One thing I want to clarify for listeners: why does heavy activity in leveraged ETFs matter for regular investors?
Good question. Leveraged ETFs rebalance frequently to maintain their leverage target, which can create outsized intraday moves in the underlying stocks or sectors. For regular investors, it means you could see big swings and wider spreads, even if the broader market was calm. So, with heavy volume in those products, you want to be mindful of execution risk and avoid getting caught in short-term whipsaws.
Okay, quick reactions, short ones. Not what anyone expected. Yeah, that was a day of contrasts.
Absolutely. If I had to sum it up in 2 points, watch whether energy strength is confirmed by commodity signals and flows, and in AI, prioritize vendors that can show measurable revenue impact from their deployments.
So, final takeaways for investors?
1. The energy move could be the start of a narrower leadership trend into cyclicals if oil and inventory cues confirm it. 2. AI adoption was real and cross-industry today, but you should prioritize names with demonstrable monetization. 3. Narrative risk in small caps is real. Treat partnership claims skeptically until counterparties confirm.
Perfect. To wrap up, thanks, Jonathan. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks, Tyler. Great discussion. Talk soon.